Now we will do one problem which is related to a work of art, and I would like to remind you the accounting standards for this work of arts or any historical treasures from your textbook chapter 17. So if you go to page number 801, it kind of summarized that governments should capitalize any type of work of art or historical treasures or any type of similar assets at their historical cost or fair value at the date of the donation. So government wide financial statement should record it as an asset. Now think of your fund financial statement. If this type of work of art or any historical treasures, and this is viewed under the enterprise fund, that means a fees is charged to see those type of objects, then they will follow the same accounting procedures just like the government wide financial statements. Now if it is considered within the governmental funds, then they will show this type of acquisition as an expenditure. Remember, governmental funds, they should not record any capital assets, so they will show it this type of acquisition of any artwork as an expenditure. But if it is a gift, then no entry is required. Now Gatsby always encourages the capitalization of all those artwork and historical treasures, but they have few conditions, and then if you meet those conditions, then recording those as an asset is optional. So there are three criteria, and you have to meet all of those three criteria. Then it's up to you whether you will record it as an asset or not. So these three criteria are that type of artwork or any historical treasures would be held for public exhibitions, education, or research purposes, and the entity will not make any financial gain. And the second criteria is that it is protected, kept unencumbered, cared for, and preserved. And third criteria is that the organization has the policy that if you sell those type of objects, then the sale proceeds will be used to acquire another items for collections. That means you cannot hold these type of artworks as for your investment purposes. So if you meet all of these three criteria, then it is optional to record it as an asset. Now if you record it as an asset, here comes the question of depreciations. Remember, you will depreciate if it is considered as exhaustible. Now let's see this example. It says that on January 1st, 2017, the city of Graph pays 60,000 for a work of art. That means they are acquiring. Since they are acquiring, of course, they have to record it. And if you think of government-wide financial statement, they will show it as an asset. Now let's see what are the criteria here. The city will take appropriate measures to protect and preserve this piece. Okay, that's good, one criteria. However, if the work is ever sold, the money will go into unrestricted funds. That means they are not fulfilling the third criteria. That means if they sell it, they can use the money for any purpose. That means now it is not optional to record as an asset. So you are not fulfilling the criteria. That means you must need to record it as an asset. Now the work is viewed as inexhaustible, but the city has opted to depreciate it. Well, they decided, although it's kind of inexhaustible, but they will depreciate it over 20 years. Now, what would be the reporting criteria for the government-wide financial statements and fund financial statements? Remember, for government-wide financial statement, they will record it as an asset. And here, remember, they also decided to here calculate the depreciations for 20 years. So they will also calculate the depreciations. Now, on the other hand, if you think of the fund financial statement, then we usually do not record any capital expenditure. Rather, the purchase of this artwork will be considered as a regular expenditures, not a capital assets. So now let's see the journal entry. So for the government wide financial statement, they will record it as an asset. So they will debit artwork, which is an asset, and they are purchasing it, so they will credit cash. And if it would be a gift for government-wide financial statement, they could show it as revenue. Now the amount here is 60,000. Now remember, at the end of the year, they have to calculate the depreciations because they decided to depreciate it over the 20 years, and it's the straight line. So 60,000 over 20, that means every year they will record their depreciation expense, which is 3,000, and they will credit accumulated depreciation, which is 3,000. So that is the government wide financial statements. Now fund financial statements. For fund financial statement, actually it didn't say clearly what type of fund is it. Is it under the enterprise fund or the general, that means governmental fund? If it specifically mentions that it is an enterprise fund, so you will treat it just like the government wide financial statements. That means option number A. But if nothing is mentioned, we will consider it as under the general fund, that means governmental fund, which follows the modified accrual and which does not show any capital assets or in long-term assets. So under this fund financial statements, we are assuming it's under the general fund. We will show this as an expenditure. So they will just show this payment as an expenditure. They can call it like artwork, and they will credit cash. Remember, if we assume it's under the general fund, that's the basic assumption. When nothing is mentioned about what type of fund is it, then we should not record any capital assets. And since there is no assets, so there is no question of depreciation. So the total amount will be considered as an expenditure. That is how they will show it under the government-wide financial statement and fund financial statement.